Is it foolish to chase the dream of home ownership, or is buying a home actually a good long-term investment? In order to really know this, we must look at a few factors. First, the stability and the risk involved in real estate, the actual return on investment that you can get from real estate and how that compares to other investments, and also where prices are expected to go. Experts across the board disagree whether or not real estate is a good financial move specifically for millennials. So instead of speculating, let's look at the facts, starting with what is the risk involved in purchasing real estate. As you can see, home prices have increased substantially since the 70s, but during that time, there are dips that occur in the market. The risk is that you purchase a home when prices are high and then are forced to sell when prices are low. However, these dips since the beginning of history have been temporary and have always returned or surpassed previous market highs. So what this means is that if you are looking to buy a home for the long term, then you have almost no risk because you're not going to be forced to sell when the market is low. However, if you're looking to purchase a home and then move within 2 to 3 years, then you have a relatively high risk of being forced to sell when the market is low. For many investors, real estate is considered the safest form of investment because they understand that if they buy a home and worst case scenario happens and the market turns, prices have, and according to every available metric, always will, return to previous highs and actually surpass them. Second, let's look at the actual return on investment that you can expect with real estate. Over the past 30 years, the average home in the United States has increased in value by around 6.3% yearly. Now you compare this to, say, the S&P 500, which has increased fairly consistently over the same period of time, about 10.5%. And it kind of seems like a no-brainer, right? Stocks have almost 4% higher rate of returns. But one thing to consider is that 6.3% increase in value doesn't include the value that you can directly add as a homeowner. You have infinite options to rent, which creates an even higher rate of return besides just what the value is based on the market. You also have a direct influence over the value because you can renovate the home, you can paint it, you can redo the kitchen, put in flooring, whatever you want, and increase the value of the home. I would also argue that real estate is a safer investment than stocks. Third, where are home prices expected to go? Of course, nobody has a crystal ball, and if you put a bunch of experts in a room, they will disagree with each other. And this is because, unlike a typical resource that's only influenced by supply and demand, home prices are influenced by a plethora of different things, primarily interest rates and, of course, supply and demand still. But there are also other factors which makes it so hard to predict. Interest rates the past year have steadily increased from their all-time lows in 2020, and they sit around 3.5%. So as interest rates continue to rise, it becomes harder and harder and more expensive for people to actually purchase homes. This is counteracted by the extremely high demand and low supply. Right now, about 40 to 60% less homes are being built than ever before in history. And as everyone knows, people are moving. This is forcing prices upwards because there's a huge supply and demand issue. Not to mention materials for building are extremely high, which makes building costs high. And so new builds are higher priced. Although interest rates are rising, home prices are expected to continue to stay steady. In the past, when markets crashed and home values rapidly decreased, it was due to artificially increasing the value of homes. So for example, in 2008, banks made it extremely easy to get loans. And so at a certain point, people couldn't pay it. They gave loans to people who couldn't pay them. And so everyone was abandoning their homes, foreclosing, and that was really a big cause for that bear market. Now, prices are where they are because of supply and demand, which is a natural cause. And so the chances of a big bear market, once again, are very minimalized. Overall, if you plan ahead and don't rush the sale of your home, then real estate can be one of the safest investments available to millennials. Talk with a professional about your specific situation to see if you qualify, or visit my website at GabrielModermanRealEstate.com.